Hey guys, good afternoon, everybody. Today is Wednesday, June 1st. It's about to be 2 o'clock p.m., our scheduled time for our mentoring session today. I'm going to go ahead and set up this room real quick, and then we can get started with the mentoring session. So let's get a few things over here lined up. This looks good. It's good. A few more things here to set up real quick. And we should be good to go right about here. All right, a couple more things here, and I think we should be good to go. All right, solid. So let me get this link sent out to you guys here in the premium. Solid. This is going to be all right. There we go. Link sent out. I'll give a few more minutes for people to join in. I'm going to go through here and just update a couple of things, specifically the liquidity here on the higher time frames. All right, so I'm going to go over here on the daily. All right, liquidity marked up there. 8 hours. 4 hours. 2 hours. One hour over here. .30-minute over here. See if there's anything else. Hey guys, how's it going? If you guys are just joining the room, I'm pretty much just playing around with the liquidity zones here. I'm trying to see if there could be any possible entries when the market reopens, but it doesn't really look like it right now. There's a lot of liquidity farther down, but it's not necessarily where price currently is. So we'll keep an eye out for it. But I think price is still kind of far from everything else. All right, so it's 2:05 right now, guys. It's about 5 minutes after our scheduled start time for the mentoring session. So if you guys have any questions, feel free to put your questions in the chat. We'll go over each question in order. And the session will pretty much run until we run out of questions. So feel free to drop whatever questions you guys have in the chat, and then we'll get started. Otherwise, I mean, the session will go on for as long as we have questions. So I think people are still making their way in. There's only a few people in here right now. So I'll give it a few more minutes for people to join. But other than that, pretty much all liquidity there on the higher time frames. I'm gonna mark up some of them here as well on the 1 minute, just for reference. All right. All right, looks good for the most part. Let's go on these short time frames, 30-minute. Market is closed right now, so you're not going to see any movement. It's going to reopen in about an hour or so. Other than that, there's not really much here. So as you guys can see, the areas of liquidity are pretty far off from where price currently is. There. Yeah, that's about it. Out to the 10-minute. Five-minute. And I think that's about it. 1 minute. We'll wrap this up. So I think that would be it for, actually there's a lot of liquidity right here. So I'm going to take a look at the retail sentiment to see if it's changed much since we got off the live earlier. Retail sentiment is currently 54% long. The fundamentals are bearish. So this is the bias is starting to shift towards a bearish bias, which is perfect for us because that's what we're looking for as we get closer to NFP on Friday. Other than that, I don't have any questions lined up, guys. So if you guys have any questions, feel free to put it in the chat. As a reminder, we'll continue on with the session for as long as we have questions. But if we don't have any questions, then there's not really going to be a use for this session. So I'll hang around. If you guys have any questions, just put them in the chat. I can help you guys with whatever strategies you guys want to review. If there's any trades that you guys have any questions with that you took over the past week, if you have the timestamp, we can look over that as well. If there's a reason why you're confused about why it worked or why it didn't work, we can go over that. If there's any questions about trade psychology, anything like that, feel free. I'm here to help you guys out. So there's only a few people in here. I don't know if people forgot it was today. I think I did give a reminder during the this session. I know the schedule has been kind of screwed up because people are requesting to have it on different days. So I think starting next week, let me check the calendar. I think starting next week, I'll get back to the usual schedule where we have it on Mondays. Today was a holiday week, so we didn't have it. But yeah, I think starting next week, we can probably get back on the schedule. iPhone's asking, what's up, Sean? Have you ever traded on NFP day? Yeah, I mean, we always trade on NFP day if there's something good there. Like if there is a quality entry available, then yeah, we'll take it. But oh, Swelly, how's it going, bro? Yeah, so I mean, we do trade on NFP sometimes. It's just it depends on how high quality the trade is, right? Because it's a really risky day to trade. So like if you don't have an overall bias, I probably would just avoid it because you don't really know what direction price is going. And there's a lot of manipulation on NFP as well. The thing that we like about NFP trading when there's a bias is that, like, if price is being manipulated the opposite direction of the bias, you can anticipate the swing back in your direction. So that's one time that we would probably trade NFP. If there's no bias, though, you really don't know what direction price is going. So it's hard to really, determine which way you want to be trading in, because you can technically trade both ways during NFP when there's no bias, because you'll have a lot of volatility in both directions. The only thing is, how many times can you get lucky until your luck runs out? So I personally don't trade in general plus NFP if there's if there's no bias in the market. It just doesn't make sense, because you're kind of taking it's not, I wouldn't consider it a calculated risk. It's more so like a gamble. So I personally wouldn't use it specifically if there's no bias, which hopefully there's going to be a bias, because it looks like the bias is starting to shift here. If this increases to like 65% by Friday, and then we have a overall, bearish bias, then yeah, I would probably take trades for a sell. But if not, then I'm probably just going to sit it out overall. Other than that, let's see. Yeah. So he said this week showed how strong the buy strategy is. There hasn't been a strong bias this week, and price has just been all over the place. Yeah, and I agree too, Swally, 100%. That's the main reason why I wait for the bias, because you really don't know what direction to trade in. Like for today, the bias started to shift for a sell towards the end of the session right here. You can see price starting to make its way, back down. It pushed up slightly. It consolidated a bit, and then it made its way back down, right? That's basically what we were anticipating. So like for here during Asia session, we're probably going to see it consolidate further, and then possibly London into the New York crossover. It'll probably start to come back down. So you can see it better on the higher time frame, like the 10-minute over here. You guys can see that price is, it's been in a downtrend. It's just, it looks like price was in an uptrend for this week because you had like those random pushes to the upside. But realistically, price is really, it's been going down. So if you look at the higher time frame, you can see price was going down. It just pushed up here slightly, and then it came right back down. So this is when, or sorry guys, I just got sidetracked right now. This is why you want to wait for the bias, because I do see an overall bias for a sell, but it's just not there yet. So on Friday, that's kind of what we'll be looking for. So I just got tagged in this chat, so I'm not sure. I don't know who this is. No name. I don't know this. They said, I noticed good trades come at 1 p.m. I don't see any good trades here at 1 p.m. 1 p.m. is probably like the worst time to trade, because that's right before market close. Market typically closes for most brokers around like 1:30. So if you're trading on 1 p.m., which is right here, like right here, this is where they said the good trades come up. I don't see any good trades right here at 1 p.m. because price literally just went into consolidation. So I don't really agree that there's good trades, because I don't see anything right here. You guys can just see for yourself right there. There's not really much to follow. This is price from 1 p.m. There wasn't really any entries. Plus the volatility was super low from this point right here. It's only like about 500 pips. So like if your stop loss is, depending on like what trade you plan on taking, if your spread's too wide, like over 200 pips, it's like impossible to enter anything here. So unless you're talking about a different time zone, maybe no name is in a different time zone. Yeah, honestly, I don't know who this is. He messaged me on April 26th and said, hey man, I said, hey, but you never said anything back. So I'm not sure who this person is. But all right, anyways, back to the next question here. So the next question is from Brian. Brian's asking, you're looking at CNBC US 30 futures right now. right? The market's closed, so there's not really, you can't really look at anything because you can see the last update here was at 140. I'll send this to you right here, Brian. So this is the futures data. This is what you use when the market's closed. You don't want to use this when the market's open. You want to use the average for the day. This is the average from the day right here. And this is the futures data, which is open 24 hours. So Brian, I sent the link in the Zoom chat. If you want to pull that up, you can use this. This is what you'd use during off hours. So after the US session is closed, you can use this if you want to trade during Asia or London. It's not going to be as accurate as the daily because you're looking at it during closed hours, but it'll give you some leverage when you're trying to identify, you know, what direction the fundamentals are going after hours or pre-market. So there's a link right there, Brian. Yeah, no problem. Other than that, I don't really see any other trades here for us to look at or any questions. If you guys have any questions, you know, feel free to put your questions in the chat. This session is pretty much gonna run for as long as we have questions. So if you guys have any questions whatsoever, just go ahead and drop them in the chat and we can go over whatever you guys want to cover. Let me just go over here to no name. So closes around 1:30. Just gonna give this markup to no name. I'm not sure if he's on this mentoring session. Highlighted area that all right, let me just respond to this guy here. Okay, perfect. We got some questions here from Alexander. So I will go over that shortly. Let me just go over this first question here. So question from iPhone. iPhone's asking what lot size would you use for a brand new so your lot size doesn't matter if it's brand new or if it's old. It's just, you know, your lot size is going to matter on the type of trade you plan on taking. I feel like a lot of people think that there's a fixed lot size you're supposed to use, but there's no fixed lot size. Your lot size is based off like where your stop loss is placed, because the bigger your stop loss, the bigger risk you have, right? So if you have a bigger stop loss, you're going to use a smaller lot size. If you're on a 200K count, iPhone said, oh no, I mean, you're just starting an FTMO account like when you started. It wouldn't matter. You're still, you know, your lot size doesn't matter if you're brand new, if you've been trading for years, if you know what you're doing, if you don't know what you're doing. You should be using proper risk management. So it doesn't matter how long you've been trading. You know, if you're not ready for a 200K account, then don't get a 200K account. You go with something smaller. But your risk management is gonna, it doesn't matter like how experienced you are. You should be using proper lot sizing depending on your trade. Because if you don't use proper lot sizing, you're never gonna pass your challenge, right? So like for example, so FTMO 200K account, right? So 1% of 200K equals, and I'm just going to do the math so that you guys know how to do it. If you want to figure out what 1% is, you'll just put 200,000 in your calculator. You'll multiply it by 0.1, and it's going to be 2,000, right? So that's going to be 2,000. So typically you want to risk between 1 and 2% per trade. You don't want to risk anything more than that because you're going to be over leveraging because you can only lose 5% in a day. So like, for example, if you're trading a 200K account, you want to be risking somewhere in between this. I typically risk about 1.5% because this will provide me like enough risk, but also enough probability or profit that I can pass the challenge. Or if I was doing a challenge, in your case, since it's a new account, you can still pass. You don't want to use anything too low or too high, because if you're using something too low, you'll never pass the challenge. If you use something too high, you'll blow your account if you make any mistakes. So it doesn't matter like how experienced you are. If you're not ready for a 200K account, then don't use a 200K account. It doesn't make a difference whether you're using a 200K account, 100K account, 50K account. You should still be using percentages, because in order to pass, so like to pass, you need 10% profit, right? Max daily loss is 5%. Max total loss is 10%. So it doesn't matter like what account you have. If you have a 200K account or 100K account, you should be basing your trades off risk percentage. So like if you're to take a trade like that, like for me, I usually use a 10 lot. So FTM 200K account. So using a 10 lot with a 300 pip stop loss equals a $3,000 risk, right? So if I'm using that, that's equivalent to a 1.5% risk. That makes sense. That's why I use that if I'm going for a bigger move. Like for example, if I'm doing a 10 lot with a 500 pip stop loss, then that's going to be a $5,000 risk, right? So if you're taking a risk that big, you're going to be risking about 2.5%, which is over leveraging in my perspective. Because the thing is, if you so if you're taking a 10 lot with a 500 pip stop loss, if you lose 2 trades, you're going to be reaching your max daily loss. So you're over leveraging with that. The thing with the 1.5% risk is you can lose 2 trades and you'll still be fine. You won't be reaching your max daily loss. It just depends on like what you plan on trading. So like depending on where your stop loss is, if you have a 300 pip stop loss, then you should be risking that much. If you're going for something bigger like a 500 pip stop loss, ideally you want to lower lot size. So like if you're doing a 500 pip stop loss, you might want to use like a 7 lot with 500 pip stop loss, or even an 8 lot. I mean, it just depends on like what you're trying to risk, because you just don't want to be going past the threshold. I think that's the main problem with a lot of people. They don't understand how to calculate risk. So like they take too big of a lot size with too big of a stop loss, and then they end up reaching their daily loss. If you guys can keep it below that, it's like virtually impossible for you to like blow your account, because you're always going to be within the parameters. So like, for example, here, if you were to trade this, so it'll be $7 per pip times 500. Your risk at this point is going to be 3,500 risk, which would be equivalent to like, I don't know, like I'm just going to ballpark your 1.7% risk, which is perfectly fine. Because even if you take 2 losses, so say you take 2 losses and you're using a 7 lot with the 500 pip stop loss. So 1.75 times 2, you're only risking 3.5%. So if you take 2 losses back to back, you're still going to be within your 5% risk. So you won't be failing your account or like reaching your max daily loss. I mean, that's the main key, right? It's just staying within the parameters. There's no rush. Like literally, if you could take 1 trade a day and you make 1.5% profit or more than that, 1%, even 1% is fine, because you just need like 10 good trading days or 10 good trades to reach your goal. It's the power of compounding your profits all week. If you don't take any losses and then you just have a bunch of wins that add up over the week. You should be able to pass with, no problem at all. So yeah, iPhone said makes sense now, Sean. Some people base the 1.2% risk as a lot size to use, but not the stop loss. But you explained it well. Exactly, me learning every day, and that's proper. Everyone has that same issue. I feel like a lot of people don't ask this question, or they do ask the question, but when I explain it, they don't actually listen. So you just have to base it. Base your lot size off the stop loss. So if you're doing like a 1 minute scalp, your stop loss is typically going to be about 300 pips. So you can use a fixed 10 lot. If you plan on taking like a snipe entry or the daily or something like that, you can use a 7 lot. For me personally, when I take the daily, not the daily, the breakout, I still use a 10 lot, but I usually don't use a 500 pip stop loss. I still stick to the 300 pip, just because I like to, typically when we do take the trade, it doesn't go into drawdown very much. So I just stomach the risk of it possibly, spiking the other direction to hit my stop loss, but it typically doesn't. So it just depends on how confident you feel about the trade. So that's basically why I still use a 10 lot when I take the breakout, but it's only because I'm confident. If I'm not confident, I'll lower the lot size, and that'll equate into proper risk. So it just depends. Everyone trades differently. For me personally, whenever I take a trade on the live, I usually use a 300 pip stop loss. Even if the stop loss is supposed to be a bit wider, I still use a 300 pip because I like that threshold. So like I'm okay with like taking 100 pip profit or maybe even a 300 pip profit. But I'd rather cut my losses, even though I don't like to lose trades. If I end up getting my stop loss hit, I just take the loss and I'll bounce back on the next trade. Because a lot of times if you hit your stop loss, odds are the market's just not moving smoothly, which is usually a hint that, hey, you should probably just chill out for a bit, because that's how I see it. Typically we don't lose trades. So if we do lose a trade, I'm like, all right, the market's probably messing around. So I keep my stop loss pretty tight. Yeah, exactly. iPhone said makes sense. Better to take a loss than move your stop loss. And the DOM will tempt you sometimes. Yeah, I know. I agree. Because sometimes you'll enter a trade and the spread is super wide and your stop loss will just be too tight. So like you want to drag your stop loss a little farther back. I don't recommend ever doing that. I typically don't do that. But if the spread's too wide, then sometimes you have to. But yeah, I don't recommend anybody do that, because when you do that, you just end up digging a deeper hole for yourself. So yeah, glad I could help you with that, iPhone. The next question here, let me see. I think some other people put some input in here. Let's see. So Patrick said, lower your lot size, you'll be less stressed and draw down, especially using K2 strategies where we mostly win our trades. Yeah, and I agree with you 100%, Patrick. Definitely. Peter said, once funded, treat the 200K like a 100K account. This helps make sure you keep that funded account long-term. Yeah, exactly. So I agree with Peter too. Like once you get funded, you can lower your lot size because you don't have a profit goal to reach anymore. So like if you were to get funded on your 200K account, I would lower your lot size to either a 7 lot or even a 5 lot in some instances. Because the thing is, you don't have to reach a profit goal. So I know it's tempting to make like 10% a month, but realistically, it's not. It's doable, but it's risky. So like you can risk blowing your funded account if you keep trading that way once you're funded. There's no pressure to reach a profit goal once you're funded. So once you are, I would recommend just trading normally. So other than that, yeah, no problem, iPhone. All right, so next question over here, or Swelly, I keep forgetting that's you. So Angela's asking, I don't understand how to set a stop loss and take profit. This is why I'm struggling with passing my trial, because I don't know how to properly use those tools. I watch you daily, but still confused when you say it's going to hit full TP. How do I know this? Thanks, Sean. Hope this isn't a stupid question. No, it's fine. There's realistically, guys, if you guys are learning and you're confused, there's no stupid questions. Like if you're confused with it, you're confused with it. What I would recommend is I don't know if you use like the actual application, because if you're using the actual MetaTrader 4 app or platform or whatever, we use the DOM tool. I don't know if like you've been using it, Angela, but that's what everybody's been using. The DOM stands for depth of market. If you want to figure out how to use it, I can't drag my MT4 over here, but if you go on YouTube, there's, I mean, there's a ton of like resources out there, right? Like if you're really confused about setting your TP stop loss, like you can like literally just search up like MetaTrader 4 tutorial for beginners. I wish I could help you guys out with that, but I can't drag it over. Every time I drag it over, it screws up my platform because I'm on the Mac, and it causes issues. So like the main thing right here is if you really don't know how to use like MC4, you can just like watch this video or just search up MetaTrader 4 tutorial for beginners, and it'll show you like all the simple functions of MetaTrader 4. We use a depth of market tool. So if like you want to use that, you would just let's see. So if you want to use the depth of market tool, just search up depth of market MT4, and there's a bunch of videos here explaining how to use it. This is what we use, Angela. I'm not sure if you've been using it or not. I'm assuming you haven't, because it doesn't seem like you understand how to use it. So basically, when you click, I can't show you here, but if you click on the chart where you have your MC4 open, just right click and then click on depth of market, and then a pop-up will come up. On that pop-up, on the left side, you'll put your stop loss. On the right side, you'll put your TP. And then in the middle, you'll put your lot size. So when you enter a trade, it automatically sets your TP stop loss. If you want to do it manually, you would just go to the trade tab on your, it's going to be hard for me to explain because I don't have an active trade right now. But basically, when you take a trade on MT4, it's going to show your trade in the trade tab. When you have that open, you can just right click it and edit the parameters. Like if you want to edit the order, once you open it up, you can set the TP stop loss if you want to do that manually. What I'd recommend, Angela, is just go to YouTube or Google or whatever, wherever you want to use, and just search up like MetaTrader 4 tutorial for beginners. It's not really that difficult to set it up. I know you might think it's like a stupid question, but it's not. You know, even myself, I'm not like the best at using MT4. I just know how to use it for the things that I actually need it for. I don't like the MT4 platform at all, but we have to use it because that's what they use for FTMO. So I don't really have much of a choice. So if you want to watch this video, I think this video is pretty good. It pretty much covers everything for MT4. So if you just search at MetaTrader 4 tutorial for beginners, Angela, this video will come up, and there's like it's pretty in depth. He also has like chapters over here. So like literally everything that you need would be right here. So if you do watch this video, I'm just going to post it in the thing here. I'll post it in the chat. So when you watch this video, if you want to figure out how to modify your trades, just go to here to 6:13 as a timestamp, or you can watch the whole thing from 5:04. It'll tell you how to place trades. And then at 6:13, it'll show you how to modify your trade, which would be to set your, and he shows you right here actually. So this is exactly what I was just saying earlier. Once you have an active trade like this, on the bottom, it'll say this trade tab. When you have an active trade, you'll just right click on it right there. And then you can modify your order to set your TP stop loss. Or if you want to use depth of market, you can just open this video here, and I'll put this video over here as well. And if you want to set up depth of market, you're just going to yeah, so you can see right there, you right click, you have depth of market right there. As soon as you click on that, this pop-up will come up. And when this pop-up comes up, you put your stop loss, TP right there, and lot size. When you enter buy, it'll automatically set your TP stop loss. Vice versa, if you enter sell, it's going to do the same exact thing. It's going to enter your TP stop loss for you. This is probably your best option. And I posted the link in the Zoom as well, Angela. So I'd recommend taking a look at it. And then if you're still confused, just let me know and I can probably break it down for you a little more. But I think this video helps a lot, showing you how to use a depth of market. I think this would probably be the easiest thing for you so that you don't mess up setting your TP stop loss. Also, your TP stop loss is going to depend on your broker, right? So if you're using FTMO, your stop loss is going to be, you're going to have to add a 0 to it. So if you're setting your stop loss at 300 pips, you want to set that to 3,000 because you need to add a 0 to it to accommodate for the 0.0 at the end. Yeah, so like if you want to use a 300 pip stop loss right here, you put 3,000 there. And then if you want to have 100 pip TP, you'll set this to 1,000. It's just 100.0, but there's no dot there. So you're just adding a 0 to it. So that's what you would set there. If you want it set to 500 pips, you just put 5,000 on each side. Then in the middle right here is going to be your lot size. So if you're using a 1 lot, just put a 1.00, 10 lot, 10.00, and then that's pretty much it. Pretty simple. Okay, cool. Yeah, so I think that those videos will help you, Angela. Just watch those videos, and if you still need help with it, just let me know and I'll help you. Or, you know, for the next mentoring session, we can go over it there as well. Or I can try to like show you more in detail. But overall, everything's pretty much here on the YouTube. I would make a video, but every time I try to make a video on my other screen, it just screws up my MC4. Maybe in the future, if and when I get a PC or something like that. All right, yeah, no problem, Angela. Next question is from Lisa. Lisa said, hey, Sean, I have the DOM set for 1,000 TP, 3,000 stop loss, but it never kicks me out of the trade once it reaches TP or stop loss. Is there a reason? Lisa, are you using FTMO or are you using a different broker? Because I know for MFF, it's like way different. On TFF, it's like even more different. So depending on like which broker you're using, if you're using MFF, I think they use like lot size or they use standard lots. So they don't use, and don't call me on it because I'm not sure. You probably want to ask someone else in the group if that's the case. But I think on MFF, the TP and stop loss are supposed to be set to like the point number. So instead of 1,000, I think it's 100. And same with the 3,000, I think that's 300. Oh, that's weird. So yeah, Lisa said she uses FTMO. Yeah, I'm trying to figure out. So when you take the trade, Lisa, because you know on your chart, you can see where your stop loss and TP are set. When you enter the trade, does it show up on there? Like when you're in the trade, does the line for the TP and the line for the stop loss show up? Because if it doesn't show up, you might have like an issue with the with MT4. Okay, yeah, so you probably have an issue. You might have to reinstall MT4 because that's happened to me in the past where the DOM doesn't actually work. It'll enter a market order, but it won't actually set your TP stop loss. So that's the problem that happens when I drag my MT4 over to my main screen. That's why I can't show you guys on MT4 because whenever I do that, it corrupts my file. So what you might have to do is just uninstall it, Lisa, and then reinstall it. That will fix it. That's happened to me about like 3 or 4 times, and it was pretty bad. So like that's why I don't try to drag my MC4 over anymore. So I'm not sure if you're on a Mac or a PC, but I think if you just uninstall MC4 and then reinstall it, it should fix it. It usually happens if your computer shuts down or if it's like if it ends up getting caught. Like sometimes on my laptop, like when I'm traveling and I'm trading with you guys, my MC4 won't open, it'll just freeze up. So when that happens, it ends up screwing up the whole system and I can't use the DOM either. So, okay, you're on a PC. Yeah, I recommend just uninstalling it, then reinstalling it. And then you'll have a fresh platform and then you should be good to go. Just make sure to turn on one-click trading once you reinstall. It's going to give you a prompt anyway, so you won't be able to take any trades until you turn it on. But that should fix it. That's a common issue. I've had that issue a couple of times, and a couple other people in the group have that issue as well. MT4 is such an outdated platform. I'm hoping that FTMO will start allowing us to trade on TradingView. I know there's a couple other funding companies that allow it, like Top Step, but it still wouldn't work for me because I would need to have, I can't add my copier for FTMO and MFF. So even if I wanted to use a different broker, it it wouldn't work with all the accounts. All right, so I think that's it for the current questions. We have a lineup of questions right here from Alexander. So Alexander said, hi, Sean. Unfortunately, I'm not able to attend your mentoring session, but I'll always watch them later. So question here for Alexander was, he's asking basically what's my favorite strategy. I don't really have a favorite strategy. I like all of them. So like, depending on like what the market gives me, I have like a whole arsenal of like strategies to choose from, right? I mean, obviously the more common ones would be like the variation. Basically all of the 1 minute strategies, these are the more common ones because on the live session, we don't have the opportunity to be on, on live for like a couple hours for us to find other trades. We can only take what's available here on the, on the 1 minute. So basically anything here on the 1 minute would be considered, one of my favorite strategies, because I don't really have a favorite. I like all of them. Whatever is printing me money is going to be my favorite. They're not always going to be available at all times. So I mean, whatever is working or whatever is being available, then that would be my favorite for the day. So I mean, for the most part, the variations come up pretty often. So I do like the variations. The intraday, I don't use this very often, or the pivot scalp. I don't really take these too often, unless like we have a triple confluence. That's like when I would take it, because these come up so often that although they do hit, there's a lot of times where they would not hit right away. So like depending on if there's an overall bias, that's when I would use these. But the triple confluence is usually pretty solid. Like for example, I mean, there's a bunch of entries right here. So there's one that was right here. I think this hit TP. Let's see. Yeah, actually all of these hit TP here. So if you took any of these trades here, this was a pivot scalp using this one right here. And it's also an intraday entry. This would have hit TP again right here. There's another one, same strategy, pivot scalp, momentum. That would have hit TP. And then this one right here, which we wouldn't have taken because it's so late into the session, would be some drawdown. So, I mean, it depends on when you take it, but for the most part, I like basically all of the 1 minute strategies because that's mainly what I trade. I don't trade outside the live session, unless like I see something really good during Asia or London. But for the most part, I only trade during New York session where I'd be applying all of the 1 minute strategies. Next question over here from Alexander is asking if you can put strategies in order from 1 to 10. Yeah, I mean, there isn't really much to rank because all of them are high probability of winning. It just depends on how well you use them. So like, for example, if you apply the strategies as they are drawn up, like for example, if you confirm the overall bias, like literally all the strategies will most likely hit, like almost like 10, like 9 out of 10 of the times you take a trade, it'll hit. So this is like the main thing to confirm. If you can confirm the overall bias, then it doesn't really matter what strategy you're applying. You can apply like literally any of the variations. Another thing that you want to keep in mind is the red flags as well. So you just want to make sure that none of these are met. And then also you want to make sure that you have the overall bias. If you have that, then literally every strategy should be, high quality entries. So you don't really have to pick and choose. They all have about the same win rate, which is pretty high, but only if like all of the requirements are met. So yeah, I can't really put it from 1 to 10 because I don't really choose like one or the other. It's like, okay, if I see a breakout, I'll take it. If I see a high-low scalp, I'll take it. I'm not like, just because the high-low is like maybe number 5 on the list, I'm not going to skip it for that specific reason. I would still take it. So yeah, unfortunately, I don't have a favorite strategy, and I don't have in order for like which one I like more than the other. I like all of them. Like if I didn't like a strategy, I wouldn't have created it, right? All the strategies I created are because they work, and they have worked very well in the past. So everything I create, there's a reason for the creation. Like if one strategy is not working, typically there's going to be another. Like for example, here, if there's no, like if you don't see any, well, actually, I mean, these all kind of line up. Like the triple confluence, this is basically just three strategies in one. That's why it has such a high win rate, because you're combining three high quality strategies into one entry. So like this is probably going to be like one of the tops. And other than that, probably all the variations. So if like realistically, if you wanted to rank them, it'd probably be variation V3, variation V2, variation V1, triple confluence. And then these down here, I don't take very often. I usually wait for it to be like a triple confluence. So I guess that answers your question. But yeah, realistically, I don't have any favorites and I can't really rank them because I like all of them equally. Alexander said, I heard you say a couple times you used to only trade 10-minute charts and it hits most of the time. Yeah, so here's like, if you want something that's like super high quality, that's not really stressful, it'd probably be the 10-minute daily. Well, basically any of the 10-minute strategies, the 10-minute daily, the variation on the 10-minute. I mean, literally, you can apply any of these strategies on the 10-minute, the snipe as well. So the problem with the 10-minute, and let's go to the 10-minute time frame. So the problem with the 10-minute over here is that although you'll find entries, you're not going to find them very often. So like, for example, right here, if you were to take the daily entry, and I'll go over all of them here, and I'll show you like which ones hit and which ones didn't. So I don't know what the bias was around 10 o'clock, but if you were to take the daily entry, and I know this is going to be against the rules here, which is like the cutoff for entries is 9 a.m. I know this entry here came up at 10, but this is like a requirement that was put like at some point in the recent past. It wasn't like something that was originally applied. So if you were to take the daily right here, this would technically be your entry candle right here, because this would be the first valid signal after market open, which is 6:30. So if you were to take this as a daily entry right here, this would have hit your full TP, right? With like literally no drawdown. The only problem with this here is that I can't confirm what the overall bias was because I wasn't trading during that period. So I can't confirm the overall bias, but you guys can see here that this, the 10-minute is usually pretty accurate, even if you don't have the bias. Typically you do want the bias, but if you don't have the bias, a lot of times the strategy still work perfectly fine. So that'd be an entry there for the daily. If you were to apply any of the other entries here, so like say, for example, there's no entry here for any V3s. There is, this is too close to like the end of market. So here's a problem with the 10-minute. Like basically when we trade on the live, we're trading till like 8 o'clock, right? So this is the period where you can find entries. If you don't see anything within this period, then there's not going to be any entries. If you trade during the off hours, like I wouldn't trade around here because this is close to market close. But if you trade like during HS session, you guys can see that there's a lot of entries here that could have been taken. Like for example, right here, there is a V3 entry that came up right here. This is on London Open. So if you were to take this trade at London Open, your stop loss would be right there at 670 pips. You could see that this right here would have hit your TP. So overall, I think the 10-minute strategies have like a really good probability and profit risk ratio, because pretty much all the strategies here on the 10-minute are a 1-to-1 risk to reward. So you can like literally take one loss and then you'll just bounce back on the next trade, which would typically win. That's the difference between the 10-minute and the 1-minute. For this, we have a 3-to-1 risk to reward ratio. So if you lose one trade, you kind of get knocked back a bit. But if you apply it properly, you shouldn't suffer any losses, right? So like, for example, today I took 2 trades and they all hit, right? If you can just win all your trades, like for example, if you look at my trades from this week, I only took two trades today, or for this week in general. I took two trades today. They all hit, no losses. I didn't trade yesterday. And then last week, I only took a couple trades too. Like I took two trades here on the 27th. I took two trades here on the 25th. So I traded 2 days out of the week last week, but I didn't have any losses, or I took 5 trades actually. So I took 5 trades here. If you can just stack these up, like if you're just looking for quality entries each day, it'll add up. So that's the difference between the 10-minute and the 1 minute. So there's like pros and cons to both of them. If you're not comfortable trading the 1 minute, then just trade on the 10. But as I showed you right here, there's not really much of a time period where you can enter trades because we get off by 8. So like if you're only trading the 10-minute here, like you're probably not going to have any entries like at all from this point, because there's no entries that came up. There's no V3s, no V1s, no daily, no snipes. Or I think there was like one snipe that we saw earlier, but it didn't apply because there's no bias. So the 10-minute is good if there's a bias, but if there's no bias, it's kind of difficult to find any entries for you to take. So that's it with that question. Let's see. Alexander has, I think, one more question here. He said, I just really love the V1 and V3. Been practicing it for a while on different time steps. Just trying to understand which strategy should I concentrate on to practice more. So I know you're going to watch this later, Alexander. So I would probably recommend, I mean, it depends on like what time frame you trade on. So if you're trading on the 10-minute, then it'd be best for you to probably master the variation V2 because you already know the V1 and V3. So probably the variation V1 and then any of the other 10-minute strategies here. So like the snipe, that'd probably be a good one. And the, I think that's it because you already have the V3, which applies the same way for the 10-minute. So you probably would just want to learn that the snipe, the daily is like a no-brainer. You don't even have to think for this one. But the snipe and maybe the V2, I think those two would probably be your best options for the 10-minute. And then same with the 1 minute. You should still learn the V2 for the 1 minute as well. And last part of the question here from Alexander, he's asking, could you cover your thought process for speculative liquidity pushes? At what point the candle is close enough to jump in for those 100 pip pushes? And what are the conditions you are looking for? The size of the candle, bias, volume, etc. So let me see if I can find an example over here. I kind of want to mark it up on a clean chart so that we don't have too much of a mess here. So let's see, I think we have, I'm going to see if I could find an entry for, okay, so this is actually one right here. So when I'm taking these speculative trades, guys, for liquidity, and this is going to be on the 10-minute, let me just show you real quick. So like this right here, let me just draw the other areas of liquidity so you kind of know, when to pull out of the position and whatnot. Or not necessarily pull out, but so you have an idea of structure. So this was on the 31st, which was yesterday. I don't think there was an overall bias yesterday, but we're going to assume that there was an overall bias. Typically, you should only take these trades when there is an overall bias in the market. So anyways, looking at this right here, when I'm looking for a speculative trade, I'm looking for liquidity areas where there's liquidity right next to each other. Like, so for example, right here, we have two lines that are really close to each other, right? This is like one where I would be anticipating an entry. Same with this one up here. This one right here, I would not be expecting an entry because they're not right next to each other. It's too far. So like if you were to measure how far these were from each other, this is about like less than 200 pips. That's perfectly fine. You can make 100 pips in between that move there. Same with this one below here, right? there's like a 13 or 130 pip gap right there where you can take an entry. So typically when I'm looking for a speculative trade, I want to confirm what the overall bias is, and then I only want to take speculation in that direction. Especially if there's like a strong bias, because if there's a strong bias, like you can get really lucky. You can just take a trade in that direction. As long as your stop loss is wide enough, you can survive whatever drawdown it goes into, and it'll push into your profit, at some point. So like, for example, right here, I don't know what the overall bias is, but we're going to assume that it was bearish. So if we have a strong overall bias, meaning that, retail sentiment was 65% long, fundamental bias was 100 points in the negative, and it was consistently below that. And then you can see right here that the technicals are bearish already, because price is below the pivots and the trend meter is red. So everything here lines up. If you have everything here line up, you can literally take a sell and you can get lucky and it'll probably hit your TP. If you took any sells here, like literally if you took a sell there, that would have been your full TP. If price pushed down lower, same with this candle right here. If you were to take a pivot scalp for a sell, I mean, it's a no-brainer, right? You don't even have to think, because if you have the overall bias, you just take a trade and you're like, okay, full TP. As long as your stop loss is wide enough, again, right here, full TP. And there's so many here. Literally all these sells here, they all hit full TP. Full TP, again, right there, another one, full TP, because you're only looking for sells. Another one right there, full TP, etc. So with that said, if you have a bias here for a sell, I would put my sell, I'd put a sell stop order like right here, like right at that, either at that line or right below it. And then I'd go for my, 100 pips or whatever. I mean, depending on like how strong volatility is, I would just enter my sell stop there. And then if price was to come down like it did right there, it would just hit my TP right away, just shoot right through it, hit my TP, and I'm out. So this is an example of like when I would take it if there was, some sort of bias in that direction. Again, over here, let me see if there's any other bias that we could probably look at. I don't know if there's anything else here that that would be useful, but that's typically how you would look for those entries. And the volatility, you want it to be slightly high, because you don't want it to be too tight, because if it's too tight, then you're not going to be able to catch anything, right? Volatility is too low, your spread's going to be wide, and it's going to be literally impossible to get out of that trade unless like it's moving fast enough. So I'm going to see if I could find another one here. Not that one, because I wouldn't have taken that there. Okay, so here's another situation here. Let me see if this pushes back up to this point. It doesn't. Here, let me go back and find another one. I mean, if I could. There's not one there. Trying to find one. Okay, so here's another example right here. Let me just go back. So I showed you an example for a bearish bias. I'll show you an example for a bullish bias. So if you had a bullish bias, you got liquidity sitting right there. And then we're going to do the same thing again that I just did. So we'll go over here real quick. I mean, these high lows are relevant, but we'll still mark it up. All right, so same thing that I marked up earlier and that I discussed. You want to confirm the overall bias. That's going to be key. If you can confirm the overall bias, this was on May 27th. I don't know what the bias was that day, but we're going to assume it was bullish, just so I can use this as an example. So again, right here, you want retail sentiment to be 60 to 65% or more in one direction. So say, for example, here, we're going to say that it's 65% short. So with that said, you have that set. And then for the second requirement, fundamentals, you want to make sure that this is, 100 points bullish. With all those things met right there, you're going to confirm that this is a strong bullish bias. I don't know what the bias was, but we can kind of assume that it was bullish because you can see the trend is super strong for a buy. Price is above the pivots, trend meter is green. It indicates a strong bullish bias on the technical side. We're going to assume that the fundamentals are bullish as well, and that the retail sentiment is bullish. So as I mentioned earlier, you want to look for liquidity that's sitting right next to each other. So like right here, it's really close, right? You can measure that. it's enough for you to catch your 100 pips, right? That's all I'm looking for. When I take these speculative moves, I'm just going for a quick push. I want to get in and out, quick profit. This right here is too wide. I wouldn't take any liquidity that hits that area. Let's see if there's any more here. So again, right here, I would not take this. It's too wide. Vice versa down here. This is actually one that I might take. Maybe, let me measure real quick. Yeah, it's fine. It's like 250 pips. So if I'm going for 100 pips within it, and I have like a sell stop here or something, you know, I can easily catch that before it bounces back up. Because typically these are like structures that price is likely to hit. So again, right here, you can see prices kind of consolidating around this area. We're assuming that we have a bullish bias. If I was looking to enter a trade here, I'd just enter this. I'd have like a buy stop there, have it set 200 pips. Or if you're like, if you don't want to set a buy stop, you can just watch it. If price pushes and touches this point, just hit your DOM, hit a buy, and have your TP stop loss set already. So like right here, we'll wait for price to push up. It's pushed up right there. So if you did take that trade there, you know, full TP. If you want to enter it like somewhere a little later, like in the middle, still full TP. If you enter it even later, bigger push from right there, right? But again, like if you're taking these speculative moves, you don't want to be greedy. You just want to enter these trades and be in and out. Like you guys have seen Kevin's profits here, right? So you guys have seen what Kevin's been doing here. He made a lot of profit today. He takes a lot of these trades, like these same trades that I'm marking up for you guys, these little liquidity pushes. That's what he does. Because the thing is, he's experienced enough to like understand how to do this himself. He just didn't realize that, you know, this bias here makes a huge difference. So once he was able to confirm this bias plus use the high-low indicator, he was able to lock in like some pretty massive profits. Like for today, he locked in 63,000. That's crazy, right? And you can see all of his profits here. Some of them he'll hold on for a little longer, because what he does is, and let me show you an example of what he does. So like, this is what he does. I typically don't do this because it's a bit risky unless you have like a super overall bias. But what he does is he just rides it to the next area of liquidity. So like, let me pull this up to see if we could find the next level. And it's textbook. It literally happens almost every time. So like, for example, right here at the next area of liquidity, let me just go back real quick because this is too far out. Or let me go to the 2 hour. I'm just trying to find the next area of liquidity here, which I think would be, I mean, I'm assuming this is probably going to be it. But I think this might be too high. Anyways, back to the 10-minute here. It's going to be hard to use that example because it's so far out. Let me see if it even gets close to it. So I don't think it gets that far out, but basically the way that he does it, see the levels like way up here. What he'll do is sometimes he will he'll enter the trade here, and this is something that I do as well. It's just hard for me to teach you guys because it's not something that's like easily understood unless you're like really knowledgeable with like how to take these types of trades. So like for example, if you were to enter a trade here, typically you can set no TP and just let it keep running. So say you entered right here for the liquidity push. When price pushes up higher and you have no TP, instead of you know, closing out for a profit, you can just move your stop loss in profit at the next swing or like slightly below it. This is typically what I would usually do. I would just move it a little higher, and then as it pushes higher even more, I'll move my stop loss even higher, and then price pushes up even higher over here, and just do the same thing, move stop loss again a little higher. And you just keep doing it until your stop loss gets hit in profit, or if it keeps pushing up higher. So it keeps pushing up higher like that. It comes down a little bit, move your stop loss a little lower, or at this point, you move your stop loss up a little higher. And then you just keep trailing it until it's done. So as you can see, it keeps pushing up higher. Price is coming back down, pushes up again, you move your stop loss even higher right there. And you just keep moving it. You just keep adjusting it. This is like a more advanced way of adjusting your TP stop loss. But it works if you want to put in the work. So as you can see, price continues to push up higher, and you just keep doing the same thing. You move your stop loss up higher a little more. I mean, you have to be active and like on the charts if you want to do this, but you can see that instead of going for 100 pips, you could have gone even higher. You have another low established here. You just move your stop loss and profit again. and then it just keeps going up higher. And then there you go. It pulls back, hits your stop loss and profit. So instead of locking in 100 pips, you're locking like 3,000 pips, right? So you can see over here, that's basically what Kevin did. So you can see some of his profits here. He makes the bigger moves. Like sometimes he'll make 1,000, sometimes he'll make 3,000, sometimes he'll make 13,000 because he holds on to it even longer. So as you guys can see, there's like different ways of doing it. But that's typically how you would execute these liquidity pushes, or basically these speculative moves based off liquidity. So hopefully that makes sense. You know, the stuff's just going to come with practice. I mean, if you guys are still confused with this, you're not going to learn it from me teaching. You're going to learn it from you actually applying it and making mistakes. Because what you would have to do is you have to make mistakes. And then you can ask me questions like, hey, what did I do wrong here? We go back and review it. And then I can show you exactly what, you know, you could have done differently to have a better outcome. So I think that's it for Alexander's questions. So I think that's good right there. Next question over here. Let me scroll up real quick. Peter is asking, what do you think if we pick a day and we all trade on the live from market open to market close? That'd be interesting. So that increases a lot of risk. We could do that if like there's a strong bias in the market. So possibly the only time I would really want to do that is if we have a manipulated push. Like say for example, we have a bullish bias. I know we don't have a bullish bias right now, but say we have a bullish bias and price drops below, then yeah, I would probably continue trading for the rest of the day because we already know price is going to correct back up like it did right here, right? So that would be a time where I would probably trade until the end of the session. If you get a manipulated push in the opposite direction of the bias, because you know it's going to correct at some point. So if you just hang on for a couple more hours, you can catch that retracement right back up. So like for example here, if you were to take that, it's a huge push to the upside, almost it's over 4,000 pips. So I mean, there's ways of doing it, but there's a lot of times you only want to do that if you have an edge, right? You don't want to just trade to trade. You want to trade only if you have an edge in the market and you know exactly where price is likely to go, because then you don't have to risk it because you already know bias is bullish. You're like, okay, I'll just take buys from here. It's like with Rick's like back to open, right? It works the same way. Like I would only take a trade back to open if it was initially manipulated and then it was moving back in the direction of bias, because bias is king, guys. If you guys ever look at bias, you know, if you trade in that direction, you almost will never lose. But you just want to make sure that there's an overall bias there. You can't trade if like it's neutral or if it's mixed. Let's see, another question over here. Let's see. Angela's asking, I trade the 1 minute only, but I don't understand the other intervals we can look at. Does the 10-minute and longer allow you to hold trades? What is the difference? Another stupid question. Oh, so yeah, just like what Peter said, there's no stupid question, Angela. If you're confused, you're confused, right? So, you know, if you can't get help unless you ask the question. So it's a good thing that you're asking. The difference between the 10-minute time frame and the 1 minute is that each candle here is just 10 1-minute candles. So for the 1 minute here, each candle here is just one candle. So if you were to go back and just basically look at the past 10 candles, right? So like, for example, right here, you can see that these are 10 bars right here. This is one 10-minute candle. So if you look back at the 10-minute over here, this one candle right here is basically just 10 of those 1 minute candles. So it doesn't necessarily allow you to hold trades longer. It's just that you're applying the same strategy and it's a bigger move because the candles are bigger. You know, if you're applying the V3 or anything really, because the thing is, if you're trying to trade on the 1 minute and you can see that there's movement here, that's just one big candle on the 10-minute. So, I mean, the main difference is not that you can hold trades longer. It's just that you'll have a bigger gap. But when you have a bigger gap between movement, it's going to increase your risk unless you're lowering your lot size. So it doesn't it doesn't necessarily allow you to hold trades longer. It's just that the trades run longer because you're going for a bigger move versus like something that's within it. So this big candle right here was at 1250. So if I go to 1250 over here, 1250 over here. So you can see that there's one big candle right here. If you're on the 1 minute, 1250. Okay. So 1250 up until. So you can see the difference here, right, Angela? Like if you were to take a trade here, because there was a V3, I could see right there, or it's not a valid V3 because there's no pending momentum, but there's a there could technically be a V3 right there. If you were to see that right there, you would still be taking the same trade. It's just you just don't take the full move. Because for example, right here, if you were to take it, you only go for about 530 pips, right? If you were to see something similar on the 10 minute, you go for a different move. But basically the difference between this is that this just has it's 10 little candles within one big one, but it just counts as like one candle in the 10 minute. So hopefully that makes some sense. But yeah, that's the main reason between the difference in time frames. Oh gosh, no problem, Angela. All right, cool. All right, so David's asking if I can go over a high-low scalp. So yeah, sure, let me pull it up. Let me go here on the clean chart. See if I can find one here. So looks like there is one. Not there. There's one right here. So I'm going to use this as an example right here. All right, so for the high-low scalp, for the first requirement, just like every other strategy, you want to confirm the overall bias. I can't confirm the overall bias right now because the market is closed or just reopened. So I'm assuming it was bearish because it was down 186 points and the sentiment here was 54% long. So we could assume that it was bearish right here around this period. This was just like an hour ago or 2 hours ago. And with that said, we can look for sell entries. So once you confirm the overall bias that it's bearish, you want to confirm that the previous, previous high-low using the high-low indicator. So as you can see right here, there's a low at this point. You want to confirm 5 candles after it to establish the low. So we have a low here, 1, 2, 3, 4, 5. After this point, this is now established as a low. It's going to be established as a low until it gets broken. So you can see between this period here to this period, it hasn't broken past it. So it's going to be confirmed as the low with regard to this specific high low. So there's a low there. And this is going to be a high right here. And then there's another high right here as well, because these haven't been broken yet. So requirements 1 and 2 have been met. For the third requirement, you want to confirm price breaks and closes past the previous K2 high low. So this one over here has already been broken. So you have this low here, 1, 2, 3, 4, 5. You can see this candle right here touches it, so it doesn't establish it as a low. This becomes invalidated, and this becomes the next low that hasn't been tested yet. So you can see this candle right here has broken and closed past this low. So that's going to confirm the third requirement. For the fourth requirement, you want to confirm that you're trading in the direction of momentum. So in order to do that, you're going to look back at the most recent momentum signal. Right here, we have a sell signal. So we're only looking for sells because momentum is pushing that direction. With that said, we have the fourth requirement met. Fifth requirement, you just want to confirm that price is not ranging or consolidating. Looking at current price right here, you can see that price was technically ranging for a bit right down here. But as soon as this candle broke and closed below this low here, it's no longer ranging, right? Because it's now moving directional in this direction over here. So with that said, your last requirement is just to confirm that price has not touched the previous swing before the break and close. Going back from this point, you can see that none of these candles here have touched this low. So this low is never invalidated. With that said, you can enter the trade here for a sell. Right there, you enter for a 100, 300 TP stop loss. It's all set up right there. You let it run, and there you go, full TP with no drawdown. So that's an example of a high-low scalp. Let me see if there's another one here. I think there was another one right here too. So again, right here, same situation. For this one over here, this one would be invalidated because this previous candle right here touched it. If it didn't touch it, then this would be another high-low scalp right here actually, but it did touch it, so it's going to be invalidated. We're going to do the same thing again right here. We confirm the overall bias was bearish, confirm the previous high-low using the high-low indicator. This is the low, this is the high. Confirm that price breaks and closes past it, which it did right here. You want to confirm that you're trading the direction of momentum. You have a sell signal, so momentum is still pushing to the downside. And then lastly, you just want to confirm that price is not ranging or consolidating. You can see that price is moving directional here, so it's not ranging or consolidating. And then lastly, for the 6 requirement, you want to confirm that price has not touched the previous swing before this break and close. So looking at the previous candles over here, none of these touch it. This is the first candle to break and close past it, and this would fit all of the requirements. So once that's met right there, you can take this again for the same entry. Profit target is 100 pips, stop loss is 300 pips. You let it run, and there you go, full TP. So again, right there, 2 high-low scalps back to back, both hit full TP. So if there's any other questions on that, David, just let me know and I can show you, but it's pretty self-explanatory. If you can like just check off the list, it's just a checklist really, like all the strategies are a checklist. You know, if one requirement's met, you move on to the next one, next one's met, move on to the next one, etc. It's not really that difficult once you actually get it down, but I know it might be confusing initially, especially if you're not familiar with like the requirements. So, all right, guys, I don't know if there's any other questions. Let me check. Yeah, I already know these are scammers. Let me say hi. Other than that, I think that might be about it. I don't know if there's any other questions, guys. If you guys have any other questions, you know, feel free to put them in the chat. We've been on this mentoring session for a little over an hour now. So unless there's any other questions, we'll just wrap this up. But if you guys do have questions, you know, just drop them in the chat. As you know, as I mentioned earlier, these sessions go on for as long as we have questions. If there's no more questions, then we just wrap it up for the next week. And if your questions didn't get answered this week, just remember that we have this once a week. So if you missed this week, just come back next week and we'll do it over again, depending on like whatever questions you guys have. So yeah, I think that's about it. No problem, Peter. So if that's about it, guys, I think we'll close this up and then we'll pick back tomorrow morning for the next live session. So if you guys have any other questions, feel free to email me or message me on Telegram. Otherwise, we'll be back here tomorrow morning for the next live session. And then next week, we will have our next mentoring session on, I'll post up a poll, guys, because I don't know what like works best for you guys. I can like literally do any day next week, Monday through Friday. So if you guys have a day that works best for you guys, I'll just put up a poll and then you guys can vote for it. So I think other than that, we're all good. So, all right, guys, have a great rest of your day. And if you guys have any questions, feel free to reach out. Otherwise, we'll be back here tomorrow morning for the next live session. So I'll see you.